Hi there, my name is Nhyira Premium and welcome to my lecture videos on corporate strategy, ethics and governance. Now, in these subjects or in this series of lecture videos, I'll be going through 13 modules in relation to all the various things that has to be discussed under corporate strategy, ethics and governance. If you look at the lesson syllabus or course outline before this very video, you realize that I've divided the syllabus into 13 modules. So there are 13 videos that you are going to be taking in relation to the corporate strategy, ethics and governance, and everything in these 13 modules is what is contained in your syllabus. Attached to these videos, you're going to have my book, that is my book on corporate strategy, ethics and governance. This is my book on corporate strategy, ethics and governance. It is sold globally on Amazon. So you can go to Amazon, just type Nhyira Premium and then you will see this book there on Amazon. It is sold there. But attached to this video, I'm going to add this book. I've broken down this book into different modules. That is the 13 modules. So everything we're going to be discussing is going to come from this book of mine in relation to the corporate strategy, ethics and governance. Now, what is corporate strategy, ethics and governance basically about? Now, basically the subject of corporate strategy, ethics and governance, as the name suggests, it includes three things: corporate strategy, ethics, and then governance. So the first aspect is to look at corporate strategy. So we want to look at the various strategies that companies can implement, design, take into consideration so that they can gain competitive advantage in their respective industry. At that segment of the syllabus in corporate strategy, we'll be discussing issues relating to environmental factors. You know, businesses are not isolated, right? They are operating within an environment, and the environment of businesses can be subdivided into the internal environment, that is within the organization, and then the external environment outside the organization. Now, there are factors that impact or affect or influences the various decisions that businesses have to make. So under corporate strategy, one of the major things that we'll be covering will be in relation to how businesses can scan their environment. So we're going to be looking at external environmental factors that affect businesses using modules or frameworks such as the PISTEL module. We're going to look at the political factors, the environmental factors, the social factors, the economic factors, the legal factors, and technological factors that affect businesses. Then from there, we will look at the competitive industry of an organization, because every organization, unless otherwise it is a monopoly organization or monopoly institution, even that one exists in an industry. So we want to find out how businesses, what strategies they can implement and how they can analyze the competitiveness in their respective industry in that order. And we're going to be using the Porter's 5 forces in making such an analysis or assessment. Then from there, we will also look at issues in relation to why businesses in the same industry in different country, one does well and the other doesn't do well. So we're going to look at what we mean by the Porter's diamond, where we're going to look at 4 major factors that causes businesses in the same industry but in different countries, one to have a competitive advantage on the global market over the other. Another issue that we'll be looking at aside that, so these are the external stuff, external environment. We're going to use the PISTEL module, we're going to use the Porter's 5 forces, we're going to use the Porter's diamond, external analysis level. Then we will come to the internal organization or the internal environment. Here we'll be looking at the issues such as the strategic capacity of an organization in relation to the strengths and weaknesses of the organization. So we're going to be using modules such as the SWOT analysis. Then we will build upon the results on SWOT analysis so that we can do what we call the NHYIRA'S metrics, where we look at the 4 major strategies that businesses can implement after finding out their strengths, their opportunities, the weaknesses, and then the threats that they have. The 4 major strategies using the NHYIRA'S metrics in that order. Aside that, also we'll be discussing issues about value chain analysis. That is the processes through which organizations add value to their raw materials or inputs in order to get their output. So we will look at the various primary factors or the core activities. We will look at the secondary factors or the supporting activities of the organization and how these all come together in order to help the company to produce a quality product, satisfy customers, and gain competitive advantage in its respective industry. So apart from these aspects, we will come to, still under the strategy session, we will come to issues such as assessment of the performance of organization. So how do we assess the performance of an organization? If you have done financial reporting, you know one way to assess performance of organization is the usage of ratios analysis, where you use ratios, analyzing financial statement and interpretation of what? Ratios. But in corporate strategy, ethics and governance, we're going to make it a bit broader. So we're going to look at two frameworks that can be used by businesses in order to measure performance of organization. And the first one, which is commonly used, widely accepted, is the balanced scorecard, right? So this is a scorecard by a framework by Kaplan and Norton, and we'll look at it in details, where we measure the performance of organization from four basic perspectives. That is the financial perspective, how the business appears to its shareholders; the customer perspective, how the business has been able to satisfy its customers; business perspective, how the business, this is where we measure the efficiency and effectiveness of the business itself, the internal processes, the employees of the organization, among others. Then we will look at the innovative or developmental perspective. This is what the business has taken into consideration in the improvement of their processes or their systems, so that they can satisfy customers in order for them to become profitable. Aside that, we will be also discussing issues about the 3 P's of performance, where we look at the profitability, we look at the environment, and we look at profit, people, and then place. Okay, profit, people, and planet. Sorry, profit, people, and planet. We'll be looking at that one as well. It's also a framework that can be used to measure the performance of an organization. We will consider issues in relation to the various limitations that each of these frameworks, each of these modules have in that order. From there, still in strategy, we'll be discussing issues such as the management perspective of the organization, where we will mention or talk about issues such as organizational structure, organizational culture. We will talk about leadership, we will talk about motivation, we will talk about marketing, and various modules in relation to the management perspective of the organization. From there, we will discuss issues in relation to finance perspective. This is where we consider issues about the investment decisions that businesses can make, how we can measure the working capital of the organization in that order. That is about financial perspective. We'll be doing a couple of steps there in that order. From there, we will come to strategy formulation, that is the various factors that businesses must take into consideration when they are formulating strategies, and we are going to discuss issues in relation to how the strategy is acceptable, whether the strategy is feasible, and whether the strategy meets the expectation of all the stakeholders. So we are going to be discussing that one as well. Then we will look at other modules for globalization, why businesses want to go global, and various specific strategies that businesses must take into consideration to gain competitive advantage in their respective industry. We'll look at the Weinrich-Stahls metrics. We will look at the not Weinrich-Stahls metrics, we will look at the Porter's generic, where we talk about 3 basic strategies, or 4 depending on where you are standing, on how businesses, or the strategies that businesses can take into consideration. They can be a cost leadership, they can adopt the differentiation, or can decide to be focused. Under the focus, they can decide to be a focused leadership or a focused differentiation. And we'll be discussing all that and how these help companies to gain competitive advantage in their respective industries. Now from there, we will discuss issues in relation to, so aside discussing that, we will discuss issues in relation to how organizations develop their products, develop their markets, so that they become competitive in their respective industries. So we will look at the various strategies that they can take into consideration by looking at the unsolved products moments in that order. Unsolved products development, where we look at market penetration, taking products to existing markets, taking products to new markets, taking new products to new markets, then producing new products to a new market, diversification. We'll be looking at all that, and we will look at the other modules that are in relation to strategy. So when we talk about corporate strategy, these are the things that we're going to be majorly, or we will major in and to talk about in that order. Apart from these, we will be talking about the various introduction to corporate strategy, where we talk about the elements of strategy, the levels of strategy, the lenses of strategy, and then trying to understand what strategy really is about. So we'll be doing all these under the corporate strategy aspect, right? Now that is a very huge aspect of the syllabus, okay? This is a very huge aspect of the syllabus. From there, we will come to the ethics aspect. This is where we look at the concept of our business ethics. That is how businesses can act ethically or behave ethically in order to gain competitive advantage in their respective industry. Then we will look at the accountants and ethics. That is how you, as a business leader, you can act in line with various standards, various regulations, so that you can satisfy the objective of the company and then act well so that the company as a whole will be able to achieve its objective. Aside that one, also we'll be looking at the personal qualities of the accountant, we'll look at the professional qualities of the accountant, then we'll discuss the various threats that are likely to come upon the accountant in relation to his independence and being able to carry out his duty. And we'll look at the self-review threats, the financial threats. We will look at the issues about familiarity threats and other things in that order. Now, so these are the concepts that we'll be discussing about business ethics. Then we will conclude on talking about governance. Governance is a very huge aspect, very important key aspect of every business, every successful business here in Ghana, in Europe, in America, in Asia, across the globe. Governance has become a very key issue. So we will look at the various issues about governance. We will look at the governance concepts. We will look at how the various governance principles that you have to, the OED principle, the general governance principle. We will look at the UK combined codes of governance, and we look at the various governance issues. We will look at the board structure, the roles of the board. We will discuss issues about the responsibility of the CEO, responsibility of the board. We will look at responsibility of the board chairman. We will discuss the various subcommittees in an organization, like the audit committee, like the remuneration committee, like the nomination committee, and all risk management committee, and all these subcommittees in an organization, and the role they play in order for the organization to be able to gain competitive advantage. Then we will finally conclude on something in relation to corporate strategy. Corporate social responsibility, corporate social responsibility. That is how businesses give back to their society, the element of strategy, the various stances of strategy, and how businesses can use that to gain competitive advantage within their respective industry. So if you ask me that, what is corporate strategy about? This is the overview of corporate strategy, and all these have been packed into these 13 modules that we'll be going through, and at the end of the 13 modules, all these that I've mentioned will become sensible to you, will be logical to you, and you will understand how businesses use all these things that I've mentioned in order for them to gain competitive advantage in the respective industry that they are operating in. Now, how is the examination like about corporate strategy, ethics, and governance? Now, the corporate strategy, ethics, and governance is the only subject currently in the IECS syllabus with a unique manner of how questions are set. The reason is that the examination is divided into two. We have the section A and then the section B. The section A aspect is going to contain a case study, which is going to be a 40-mark case study, right? 40-mark case study, which is going to be based on modules, it's going to be based on strategy, it's going to be based on governance, it's going to be based on some calculation, financial perspective. So 4 things are going to be playing in relation to that case study. Modules are going to be there, governance is going to be there, strategy is going to be there, then some financial perspective issues are going to be there in relation to the 40-mark case study area. Then you come to the section B area, where you're going to have 5 questions from which you are going to answer 3, so that you get 60 plus the 40, so that you get your 100 marks in that order. And we are going to go through all these and the techniques that has to be employed in relation to how corporate strategy examinations will be written, will be scored, and how you can perform well in the exam hall. So this is just a brief overview of what you must understand when it comes to corporate strategy, ethics, and governance. And I believe that it makes enough sense. And even though it looks bulky, there are a lot of modules, there are a lot of concepts there, it's going to be very simple, because I promise you I'm going to make it very simple, very intuitive, very understanding. I'm going to use a lot of illustrations in my presentations, and will make it very practical for you, so that when you get to the exam hall, you can express yourself, you can write the correct and the way that you have to write them. And as I'm lecturing also, I'll be mentioning the key areas that you should expect the examiner to set questions on in this examination sitting, because not everything that we're going to learn in these 13 modules will be in the exam hall. So I'll be pointing out the various areas that you have to focus on in relation to the examination, and you have to pay close attention as I make my presentation, as I lecture, so that you point out or you identify the areas that I place much emphasis on, so that you can increase your chances of passing in the exam hall. Right, so having understood the issue about the overview of corporate strategy, ethics, and governance, I guess we are ready to shoot the first one. And so let's look at the first module, that is understanding strategy. So let's begin with understanding strategy. Right, now understanding strategy, or strategy, is a very difficult definition. Okay, it's a very complex subject that we cannot just get up and throw some words down and say that is the definition for strategy. But if I should ask you what is a strategy, or if I should ask you, let's just leave the subject in a moment, we will come back to it, but let's just leave it in a moment and just make it very practical. If I ask you what is the strategy you adopt, or you will going to adopt to study corporate strategy, ethics, and governance, or what is the strategy you're going to adopt in order for you to pass your exams, maybe you're going to tell me that, all right, for reading subjects such as corporate strategy, what I'm going to do is to read and write, and I will try to memorize. I can be working with it. I will use charts to be able to memorize some of the modules, some of the concepts. Then I'll relate them to say that is the strategy you are adopting. In other words, it is the various steps you are going to take. It is the various actions that you are going to take, so that you'll be able to what? Pass your exams. So here the goal is for you to pass the exam. So what are the various actions that you're going to take? What are the various things you're going to put in place? How are you going to do what you have to do in order for you to what? Achieve your goal? The same thing happens to strategy. When we want to understand strategy, strategy simply refers to, as I put it in a simple way, that strategy can be defined as the various course of action, or the course of action, the activities that an organization has to take in order to gain competitive advantage in its respective industry in the achievement of a long-term goal. Right? So what activities will the organization undertake? What policies must they put in place? What actions must they take in order for them to gain competitive advantage in their industry for the achievement of a long-term goal? Remember, yes, we are every business is in an industry, and the industry is is full of competition. But the question is, how can the business skyrocket within the industry? How can the business stand out so that everybody wants to come to that business? Every person, every customer of that industry want to relate to that business. So what kind of strategies are we going to put in place as businesses in relation to gaining that competitive advantage in that order? To put it into perspective, at the end of this module, you should be able to define and explain strategy in your own words, and also in light of the things that we are going to be discussing. 2, you should be able to explain the levels of strategy, because there are 3 levels of strategy that we'll be talking about. 3, you should also be able to explain the elements of strategy. There are 3 elements of strategies that we're going to be talking about. And then the last one is about the lenses of strategy. That is the various opinions that have developed over the years in relation to how strategies are formulated, implemented, and carried out by organizations. So at the end of this module, I expect you to be able to understand these in relation to corporate strategy introduction. So let's begin the journey. Let me open my slide here. Right. Now, so in order for us to define strategy and put it into perspective, even though I've given you a preview of what strategy is all about, we will borrow the thoughts of a couple of people. there are four major people whose thoughts we're going to borrow in relation to trying to understand what strategy is about. We're going to look at a definition by Chandler. We're going to look at a definition by Peter Drucker. We're going to look at a definition by Johnson, Scholes, and Whittington. Then we'll conclude on understanding strategy with a definition from Henry Mitzberg, in that order. So these are the four major group of people that we're going to borrow their thoughts in relation to trying to understand what strategy is all about. So according to Chandler, 1962, he defines strategy as, or strategy can be defined as, the determination of the basic long-term goals and the objectives of an enterprise, and the adoption of courses of action and the allocation of resources necessary for carrying them out. Right, so what does that mean? So according to Chandler, if you want to understand strategy, it involves the following. One, you need to determine the goals, or if you want, the objectives of the organization. You have to know the goals or the objective of the organization. What do we want to achieve? Where are we going? What is our objective? Maybe we want to become the market leaders. Maybe we want to become the preferred brand. What is our goal? Now, Chandler is saying that once we know our goal, then two, we need to be able to now adopt certain courses of action, right? So two, adoption of courses of action. This refers to the various activities that a company has to implement, the various behavior pattern or activities that they have to undertake in order for them to achieve their goals. And then the third thing that Chandler talks about is that in relation to allocation of resources. So according to Chandler, if you want to understand strategy, strategy can be understood from three levels: the determination of the goals of the organization, the determination or adoption of a certain courses of action, then the allocation of resources in that order. So basically it relates to long term, okay, the long term in that order. Secondly, Peter Drucker also defines strategy as a pattern of activities that seeks to achieve the objectives of the organization and adapt its scopes, resources, and operations to the environmental changes in the long term. So Peter Drucker has added a flavor or something to what Chandler is saying. Yes, Peter Drucker is also talking about a long-term goal. Yes, he is talking about courses of action. Yes, he is talking about resources. But beyond that, Peter Drucker is adding that the organization should be on the lookout for environmental changes. So the fact that you are looking to achieve a long-term goal, the fact that you have implemented a course of action, it doesn't end there, because in order for you to achieve that long-term goal, you have to look at the changes in the environment so that you can easily adapt to the changes in the environment to gain competitive advantage within their respective environment. Third is the definition by Johnson, Scholes, and Whittington. Johnson, Scholes, and Whittington. Now, according to these thought leaders, they define strategy as the direction and scope of an organization over the long term, which achieves competitive advantage in a changing environment through its configuration of resources and competences with the aim of fulfilling stakeholders' expectation. So you realize the pattern, okay, of the definition, of the three definitions we are considering. Johnson, Scholes, and Whittington is also saying that, right, it's about long term, it's there. It's about pattern of activities, it's there. It's about resources, it's there. It's about taking into consideration changes in the environment, is there. But they added another flavor to it, that is about the expectation of stakeholders. So that the business can gain competitive advantage. So if we want to understand strategy, strategy can be understood to be the determination of long-term goals of an organization and the courses of action to be undertaken to enable the organization to allocate resources in order to adapt to changes in the environment in the achievement of the expectation of stakeholders, or fulfillment of the expectation of stakeholders. So these are the three levels of definitions that we have to consider. At the end of the video, we're going to consider the definition by Henry Madsberg to conclude on the thoughts of strategy. So if we want to understand strategy, strategy entails long-term goals, strategy entails courses of action, strategy entails allocation of resources, strategy entails adopting or being flexible so that you can adapt to changes in your environment, and then strategy includes fulfilling the expectation of your stakeholders, because organizations have a lot of stakeholders. Organizations have employees as stakeholders, shareholders as stakeholders, management as stakeholders, the government is a stakeholder, our customers are stakeholders, suppliers are stakeholders, bankers, the general public, and even the community that we are in are all stakeholders. And businesses must undertake strategies that will be able to help it so that it can achieve or fulfill the expectation of all these stakeholders. That is what you have to understand when we come to understanding strategy. Now that we have understood and have an idea of what strategy is about, now that we have gathered some thoughts in relation to defining strategy, let's look at the 3 levels of strategy. Let's look at the 3 levels of strategy. There are 3 levels of strategy according to Johnson, Scholes, and Whittington. So let me put them down, then we throw lights on them. So we have corporate strategy, business strategy, and then functional or operational strategy. So 3 levels of strategy. Now from here we're going to be dealing with some 3 steps there in that order. Corporate strategy. What is corporate strategy? This is the general direction of the whole organization. Okay, so this one tries to answer the question, what businesses should we be in? So corporate strategy simply refers to the whole direction of the organization. So as an organization, we will say that, okay, what businesses should we go into? What industries can we go into? What markets can we go into? This talks about the entire direction of the whole organization. And I'm going to use an illustration for you to get it as we continue. Now, when it comes to the corporate level, there are some elements in that order. It includes deciding the purpose of the entity. Why are we existing? Why did we establish the company in the first place? That is the corporate level. Deciding the scope of the activities of the entity. What kind of activities can we undertake? What is the reach of the activities we can undertake as a company? Then the third one is matching the activities to the external environment and also its available resources. Okay, so what is the opportunities available? What are the threats we are exposed to? And what is our strategic capacity? That is the available resources that we have as a company. Then matching the purpose and the activities of the organization to the expectation of owners. And then finally, matching the purpose and activities of the expectation of other stakeholders. So the corporate strategy has to do with the whole organization, the direction of the whole organization. What businesses can we be in as an organization in that order? The second one is called business strategy, or what we refer to as competitive strategy. This is concerned with how each strategic business unit within the entity contributes towards the achievement of the corporate strategy. Okay, so it is how the organization or its strategic business unit tackle particular markets in order to gain competitive advantage in that order. So what do I mean? Let me use an example. Okay, let me use GN Group as an example. So I'm using GN Group as an example so that I can explain the level of strategy very well to you and explain all these things to you. I'm going to use GN Group. When we talk about corporate strategy, the GN Group, okay, the parent company, will decide what businesses should we be into, okay? So that is the first level, corporate level. Then they will decide that, okay, we want to be into these various businesses. These are what we refer to as strategic business units. Okay, so we want to be into insurance, so GN Insurance. We want to be into bank, so GN Bank. We want to be into, what else? House, so maybe GN Real Estate. I don't know if he has something like that though. Or we want to be into hospitality, so maybe GN Hotels and hospitalities, any other. So these are what we refer to as strategic business units. So business strategies simply refers to what strategies must each of these business units put in place so that they can gain competitive advantage in their respective industry. What do we mean by that? In other words, what strategies must GN Insurance put in place so that it can gain competitive advantage in the insurance industry? What strategies must GN Bank put in place so that it can gain competitive advantage in the banking industry? What strategies must GN Hotels put in place in order to gain competitive advantage in the hotel and hospitality industry? So that is what we mean by the business level strategies. Remember, corporate level has to do with the whole organization, the parent company. What businesses must we be into? Second level has to do with business level. This has to do with the various strategies that each of the strategic business units must tackle in their respective markets so that they can gain competitive advantage in their respective industry, and by that they will be able to achieve what? The corporate objective of the company. So at this level, some strategies that you can put in place can include maybe to be a cost leader, so to be the lowest cost producer. So for instance, when it comes to the banking industry, GN Bank can decide that we will be the lowest cost, the lowest interest on debt provider. It means that when you come for loan, we will be the lowest people who give, we will charge the lowest interest on loan facilities. What it means is that if the base rate, the government of Ghana is giving it at 11%, for GN Bank to gain competitive advantage, they can say that, okay, we will give it to people at maybe 11.5% or maybe 12%. And no bank does it, okay? So it enables them to attract more people for the loan facilities so that they can gain competitive advantage in the industry. Or they can decide to adopt what we call the differential strategy. Differential strategy is where they're going to charge a high interest rate, okay, but they are going to render another services in that order. What does that mean? It means that GN Bank can decide that, okay, the base rate is 11%, but if you are coming for a loan facility, we're going to give it to you at 17%. Why are we giving it to you at 17%? We will give you an officer who is going to take you on, a business consultant who is going to advise you on how to use the money, how to develop your business, and how to grow your business. So you see, 11%, we are not doing that for you. We just being the lowest. But if we give it to you at 17%, we are going to give you a consultant dedicated to you, who is going to advise you, who is going to encourage you. That is what we call the differential strategy. So when we're talking about the business strategy, we are referring to what kind of strategies must each of these strategic business units put in place so that the organization can gain competitive advantage in that order. I believe that the picture is making more sense to you by now. Then the next one, or the final one, is the functional or operational strategy. This refers to the specific strategies for different departments of the business, right? So we are coming down. So each department in each of these strategic business units, what strategies must they also take into consideration, or must they also implement so that they can gain or achieve their objectives as various departments, so that the strategic business unit can achieve its objective by gaining competitive advantage in the respective industry, so that the corporate objectives can be what? Achieved in that order. So these are what we refer to as the 3 levels of strategy. So back to my example, GN Group will decide what businesses should we go into, what businesses should we acquire. Okay, we want to go to insurance, we want to go into banking, we want to go into real estate, we want to go into hotels and hospitality. It's there. Strategic business unit, strategy level. What strategies must we put in place as a bank, okay, in order to gain competitive advantage? Then functional level has to do with the various departments in the bank, the various departments in the insurance company, the various departments in the hotels. What strategies must those various departments put in place so that it will help the strategic business unit as a whole to gain competitive advantage in its respective industry? And this is what we mean by the levels of strategy. 3 things. After deciding or understanding what the levels of strategy is, the next slide we want to talk about is the elements of strategy. The elements of strategy. So what are the elements of strategy? 3 elements. I told you we'll be doing some 3-3-3 steps here, and this is where we are. So we're going to be doing that. Remember my GN Group example, because I'm going to be using it throughout in my presentation of corporate strategy, because I like to use that concept, okay, how GN Group, its subsidiaries or strategic business units and each department, so that I can be able to make the points practical and make it reliable, so that you know that you're not just learning something that is not applicable in the business world. It's very much applicable, because I advise businesses to do that as well. So what are the elements of strategy? Okay, the elements of strategy. According to Johnson, Scholes, and Whittington, there are three, or strategy contains three elements, or consists three elements. We have what we call strategic position. It's going to get very exciting here. Strategic choice, and then strategy into action. Right. So these are the three elements of strategy. The three elements of strategy: strategic position, strategic choice, and strategy into action. So let's see what we're talking about here. When we talk about strategic position, this means making an analysis and assessment of the strategic position of the organization. That is, asking the question, where are we? So strategic position has to do with, so if an organization wants to undertake any strategy at all, the first thing they do is to ask themselves, where are we within the industry? What do we have within the industry? What is our position in the industry? What market shares do we have in the industry? What is the threat? What resources do we have? What don't we have? What is our weaknesses? That is what we mean by understanding the strategic position of the organization. All right? So here we are asking the question, where are we? As a company in the industry, where are we? In answering that question of where are we, the organization undertakes three assessments. The first one is it's the environmental analysis. So the organization, in order to understand where it is in the industry, it must look at the environment. This is where the organization uses the pistol module, so that it will be able to identify the opportunities and threats that it is exposed to. All right. So what are the opportunities available, and what is the threats that we are exposed to, and we will get into that later on as well. Apart from looking at the environment, we have to look at the strategic capacity of organization. Strategic capacity of an organization. Now, what is the strategic capacity of the organization? This simply refers to the strengths and weaknesses of the organization. It refers to what the organization can do, what the organization can't do, what the organization is limited with, or what the organization is endowed with. That is what it refers to as a strategic capacity. In other words, what finances do we have? What is our management? What system do we have? What technologies are we using as a company? That is what it refers to as the strategic position of an organization. And third is about the expectation of what? The stakeholders. In other words, if you want to undertake any strategy at all, to ask the question where we are, we must first ask ourselves, what is the expectation of the stakeholders? What is the expectation of our shareholders? What is the expectation of the employees? What is the expectation of management? What is the expectation of our customers? What is the expectation of the government from us? What is the expectation of the community that we are even operating in as a business? So we have to look at this if we are looking at the strategic position of the organization. So in asking or answering the question, where are we? Three things. We do an environmental analysis to assess or identify the opportunities and the threats. Then we undertake a strategic capacity analysis, that is looking at the strengths and weaknesses we have. Then the third thing we do is to consider what the expectation of our stakeholders have, or what's the expectation of our stakeholders is. So what are they expecting from us, each of them? Second, once we know our position, once we understand where we are, once we know the opportunities that is available, once we know the threats that we are exposed to as a business, once we understand our strategic capacity, this is what we have, this is what we don't have, this is what we can do, this is what we can't do, this is what we are endowed with, this is what we are limited with, strategic capacity. Once we understand what each of the stakeholders are expecting from us as a company, then we move on to the next step called strategic choice. So based on the position of the organization can decide to make choices. Now, strategic choices can be made on three levels as well. We have the corporate or the international level. We have the business level. And then we have what we call the development, or if you want, the functional level. So three levels here. Just ignore what I'm writing and you listen to me well. Everything is in my handout, okay? So don't worry about that. 3 levels. So if we know our position, we can make decisions about the corporates. What businesses do we go into, or about an international decision? Or we can decide the business level decisions that we want to make in order to, that is how we can develop each strategic business unit, or what kind of methods can we put in place in order to develop the departments in existing strategic business units to gain competitive advantage. So let's come back to my GN group example. So GN group or group Indium, GN group or group Indium, they are all GN group. GN group or group Indium undertook what they call strategic position. Okay, they analyzed the environment, they looked at their capacity, then they looked at the expectation of their stakeholders, and then they came to the second level called strategic choice. And they took a decision about a corporate level or international level. This is why they acquired a business in the US, the majority shares of the business in the US, and they have now opened a fully fledged branch in the US and operating in the US. Before they made that decision, they understood the environment, the opportunities that is there, the threats that they are exposed to. Before they made that decision, they understood their capacity as a company, as a group of companies. They understood what they have, their strengths. They understood their weaknesses. Then they also understood the expectation of their stakeholders. Then they decided that they want to go into the international market, and then they invested in it. So once the company understands its strategic position, it can decide to enter into new businesses, to acquire some businesses, or to establish branches outside the country once they know their position in that order. Or business level. This is where the organization decides to say that, all right, let's just develop the existing businesses that we have. So instead of going to acquire business in the US, GN Group could have said that, okay, based on our capacity, let's just find out how we can develop GN Bank. Let's find out how we can develop GN Insurance. Let's find out how we can develop GN Security or Gold Coast Security, or all these strategic businesses. Let's find out how we can develop it. So based on the capacity, based on the environment, based on the expectation of the stakeholders, businesses can make decisions on the business level. Or the final one has to do with the development or functional. That is where we look at how we can develop each various department in the various strategic business units, and also to develop a whole direction of the strategic business unit and the methods that they have to use in order to gain competitive advantage in their respective industry. So what are we saying? First, we must know our position. Second, based on our position, we can decide upon a strategy or a choice. Now, once a choice is made, we go to the next step called strategy into action. This means implementing the chosen strategy. So you have designed a strategy. Okay, so maybe based on our strategic position, they want to develop the GN Bank so that the GN Bank can gain competitive advantage. So to develop the GN Bank, they have adopted maybe Porter's generic strategy, and they have gone for what we refer to as the differential strategy. Okay, so that when it comes to interest rates on loan facilities, they are going to charge the highest interest rates, but they are going to also give what? A business consultant, okay, a full-fledged, full-time business consultant to anyone who comes for the loan, so that that business consultant will advise them on the various things that they have to do in order to grow their business. So based on the position, they have decided the strategy they want to do. Now they have to implement the strategy. The implementation of the strategy also entails 3 things. 1, organizing and structuring. This means putting into place and delegating authority. It means decision-making process must be what? Established. So this is where we put the things into place. So once the decision has been made, now we must look at whatever resources we need, who has to do what. So we delegation of authorities has to be made. Who must take this decision, who must do this, who will be reporting to who, in that order. So that is about organizing, putting in place the various resources necessary in the implementation or the achievement of the goal of the organization. Second has to do with enabling. Enabling means that the entity, enabling the entity or allowing the entity to achieve success through effective use of what? Its resources. So now that the resources are ready, we want to implement the strategy. We now have to look at, let's implement it, let's undertake it, let it start working. Alright, so that now the strategy will be implemented. The various individuals who are responsible for various aspects of the strategy will be put to work, and they will start working in that order. But remember, for any strategy that a business undertakes, there is a threat to what we call changes in the organizational structure, changes in the organizational policy, changes in the operations of the organization. As such, the third thing about strategy into action, apart from organizing, apart from enabling, is about managing change. Managing change in that order. So these are what you have to understand when it comes to discussing issues about the elements of strategy, right? The elements of strategy. Finally, let's conclude the final session on this module in relation to understanding what we call lenses of strategy. Lenses of strategy, or what we call strategy lenses. Strategy lenses. Now, if you look at the glasses that I'm wearing now, it's a white glass. So when I put it on, everywhere is white. Okay, it's a plain glass. Everywhere is plain. Everywhere is white. I'm seeing the natural world the way it is. If I should put off this glass and put on a dark glass, everywhere is going to look dark. Okay. If I put on a yellow or shade glass, everywhere is going to be yellow or gold, whatever it is. Lenses of strategy has to do with the various opinions or dimensions of strategy that has developed over the years. In other words, in the designing and implementation of strategy, what are the various alternatives, what are the various opinions that organizations hold about how various strategies can be implemented within the organization? That is what we mean by lenses of strategy. So the various opinions or dimensions of strategy implementation that has developed over the years. Under this, there are three things that we are going to be talking about. One, there are three lenses: strategy as design. Two, strategy as experience. And then three, strategy as idea. This simply means that when organizations are designing and implementing strategies, they can use any of these depending on the objective of the organization, depending on what they want to achieve, or depending on the policy of the organization. What is strategy as design? Strategy as design simply means that when the organization is developing and implementing strategies, they follow the laid down procedures within the organization. In other words, how are things done within the organization? So it can be the policy of the organization that in the launching or the launching of a new product, we are going to use the market scheming pricing. That is, we're going to charge the high price at the introductory stage of the product so that we can take the cream or take the profit before competition sets in. That is strategy as design. So any product we're going to implement, we are going to go by the lay down principles in that order, or lay down procedures in that order. That is what we mean by strategy as design. Then we come to second, strategy as experience. This is where we ask ourselves what has worked in the past, so that in the implementation and designing of new strategies, the organizations take into consideration what has worked in the past. So if in the past we've been launching new products and we have been using the pricing scheming, strategy as design simply means when we look at the impact of the strategy over the years, we look at the effect of the strategy over the years, we look at the response of the strategy over the years, so that if it is not good, we use a new thing, okay? Then if it is good, then we use the same thing again. That is what strategy as experience means. In other words, it has to do with what has worked in the past so that the business can implement that now. And that is also not a good strategy, because the fact that something has worked in the past does not mean it's going to work now, because there is always changes in the tastes and preferences of customers, changes in technology, changes in how things are done or how products are consumed or produced in that order. Then the final one is strategy as idea. This is where we ask ourselves, what can be done differently? All right, what can be done differently? In other words, if we have been doing things certain way, we have been following the laid down procedure, what can we do differently this time around? Based on innovation, based on technology, based on what is happening recently in our industry, recently in the economy, recently in the country, recently in the behavior pattern of our customers, what can we do separately? So if formally we implement or launch new products using the market scheming, then strategy as idea will mean that now if you are launching a new product, we may adopt the differential strategy pricing, where we're going to sell the products and sell add other products. So it's like buy one get one free, or buy one get two free, or buy one get that free, that kind of order. So that is called strategy as ideas. Now, to decide which of these three strategies is going to depend on, is good or bad, depend on the strategy that organization is undertaking. Because there are some strategies we have to follow what has been in the past. Like in the appointment of board of directors, in the appointment of CEO, in the appointment of board chairman, we can't look at the new way board chairman. We have to look at the lay down procedure. Who has to be? What profile must he have? What interest must he have? We have to go by that. So strategies will be implemented using any of these, depending on the objective of the organization, depending on the decision preference of the organization, depending on what the board finds that it is suitable for the organization. But for your assignment, you can check out and list out some of the strategies you think that can be implemented by design. Some of the strategies that you think we have to implement using experience, some of the strategies that we have to implement using the ideas, and you can list those things down and then email them to me. I'll check it out and then discuss them with you in that order. So these are what refers to as lenses of strategy. Remember, before I started with this module, I mentioned that we're going to find out the definition of strategy from 4 thought leaders. We saw Chandler's definition, we saw Peter Drucker's definition, we saw Johnson, Scholes, and Whittington definition. In conclusion, we want to bring the subject of strategy to home. And to bring it home, we're going to look at the definition by Professor Henry Mitzberg of McGill University, Montreal, Canada. So we want to look at, according to Henry Mitzberg, what strategy is about. Now, Henry Mitzberg also affirms to the fact that it is difficult to define what strategy is, and it is difficult to really describe what strategy looks like. But according to him, he believes that strategy must possess 5 qualities. Strategies must possess 5 qualities in order to help the companies to gain what? Competitive advantage in their respective industry. So these are what we call the 5 P's of strategy. 5 P's of strategy. So according to Henry Mitzberg, every strategy must possess these 5 things in order to gain competitive advantage or to help the company to gain competitive advantage. The first thing is that a strategy must be a plan. So the first P is plan. Plan. Now this refers to a carefully crafted set of steps that a firm intends to follow in order to be successful. So we don't just sit down and say we are implementing this strategy. No, we must sit down, carefully craft the steps that when we do this, we're going to do that. When we do that, we're going to do this. When we do this, it will do this, so we're going to do this. So it has to be a carefully crafted steps that a company design in order to become what? Successful. So you don't just stand up and say, I'm going to charge this price. No, you must carefully plan it. That is first P. Second, Henry Mitzberg says that every strategy must have or must be employed. What does that mean? This refers to a specific move designed to outfit or trick competitors. What it means is that the strategy we undertake must overpower their competitors. It means that, you see, strategies objective, the objective of us undertaking new strategies is to help the company to gain competitive advantage. So if our strategy cannot trick the competitors, if our strategies cannot outfit the competitors, then it is not a strategy. So once it is a carefully planned thought, it must be able to trick or outfit the competitors so that we can gain competitive advantage. Then the next thing is that strategy must follow a certain pattern. In other words, this means that the degree of consistency in a firm's strategic choice. So it must follow a certain pattern. This is why we said strategy is in a long term, okay? So you don't just say, I'm doing this for 1 month to gain competitive advantage. No, it has to be a long term. We are doing this for 3 months. We are doing this for 6 months. We are doing this for 2 years. We are doing this for the next 5 years, so that in the next 5 years we become the major tuition provider or major organization in that industry. That is what we mean by the pattern, the degree of consistency in the strategy that has been adopted. Then position. 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 This is a firm's place in the industry relative to its competitors. So in order to design strategy, the organization must look at its position, so that what is our market share? What is the threat? What is the objective? What is our market share? What is the shareholders? What is the expectation of our shareholders? Right? What is our strength? What is our weaknesses as compared to our competitors? We must know our position. Then the last one is our perspective. Perspective simply means how the board of directors, how management, how executive explain the competitive landscape around them. The way the board of directors, the way the management understands the competitive landscape in relation to the environment or the industry they are in will affect what kind of strategy they can craft, will affect what kind of strategy that they can design, will affect what kind of strategy that they can implement. These are what we refer to as the 5 P's of strategy by Professor Henry McBurg of McGill University, Montreal, Canada. So, in understanding strategy, these are what we have to look out for. Remember what we spoke about? We talked about the levels of strategy. So we spoke about understanding strategy from 3 perspectives. We spoke about the levels of strategy. We spoke about the elements of strategy. And we spoke about the lenses of strategy in that order. So that is it about the first module, understanding strategy. And I will see you in the second module. Thank you and stay cool.